Hello, traders, and welcome to yet another weekly market snippets. Today being the 4th of May 2025, so it's a new month. And basically today we are going to just looking at a preview of what happened last week and what we are anticipating this particular week. And of course, with the bonus of DXY and gold analysis. So my name is Timothy Carrier, and welcome to this session. So if we begin by looking at the global market snapshots and the US market's performance, Dow Jones Industrial Average, we have seen it gain 3% the previous week. And year to date, we are at negative 2.9%. S&P 500 weekly gains stand at 2.9%. That is at the close of Friday. And year-to-date gains is negative 3.3%. Nasdaq, we see weekly gain standing at 3.4%, and year-to-date negative 6.9%. The dollar index has been bullish last week with a gain of 1.02%, and yearly gains, we are talking about negative 7.8%, right? So this should be negative 7.85% and not positive. So we are talking about this year, the dollar index has been quite negative, all right? It has been quite bearish. So that should be negative 7.8%. We have seen gold as well. It has been on a bearish trajectory. All right, it has been on a bearish trajectory. So last week, gold gained 1.6%. And year to date is 22.2%, still doing quite well in terms of yearly gains. When you look at maybe probably other global indices, like maybe probably the Japan's Nikkei 225, it also gained 3.15% last week. China's CSI 300 was down 0.43%, and that was due to a short trading period because we had an elongated holiday in China. So in terms of commodities, we look at some gains, or what I call mixed moves in terms of the commodity market. So, and in terms of oil, we have seen the prices of oil being in a trajectory phase. That is WTI crude oil or the US oil, which fell by 7.1% last week to trade at 58.29 per barrel, and that was as a result of that was basically as a result of I mean not really as a result of, but that was the highest or the highest fall or the highest loss since March 2025. So, but we look forward towards the OPEC Plus output decision for this month, and therefore it will be crucial in terms of understanding or maybe probably having some projections in terms of maybe where oil is pushing next. So, but if you look at the natural gas, we had prices surge about 16.6%, and this was due to summer demand outlooks and strong job reports, which were able to boost the natural gas. So global equities, we have seen global equities being able to rebound. All right, we have seen the global equities being able to rebound, like we have seen in the second slide or in the previous slide. We have seen the S&P 500, the Dow Jones, Nasdaq 100. They were all able to push up, or they had a weekly gain. And this actually marks a strong recovery from early April. So like you can see in my graph at this particular point, this graph is showing the stock market, especially the three major US indices, that is the Nasdaq 100, the S&P 500, and the Dow Jones. And this shows basically from April 2nd when we had tariffs announced, and then later on we had the tariffs post. And you can see during the tariffs announcement, we saw all these indices push on the downside. And after the tariff pause, which was posted for 90 days, now we see the comeback. You can see now the Nasdaq gaining trajectory, the S&P 500 gaining trajectory, and the Dow Jones gaining trajectory. And they have been quite bullish the last 1 week, actually almost the last 2 weeks, because the previous 2 weeks you have seen an upward trajectory of these indices. So in the European markets, we still see quite a strong market because investors, we see a lot of inflows in the European market as investors had opted for the European market and also the Asian market as safe havens market, or basically defense to defend themselves. So because the US markets were quite a bit volatile. So and the reason why you see, for instance, in the Asian market, we have seen the Nikkei 225 gaining 3.15%. We have seen CSI 300, that is an index in China, which has just gone slowly about 0.43%. And this was actually due to a short trading period because the entire of the week it was major trading days were holiday in China. So I had a very close preview of these Chinese, I mean, a very close preview of the US markets performance. And I was looking at the intraday, Nasdaq 100 intraday, as at Friday, the May 2nd, 2025. And this data is extracted from Yahoo Finance. So as you can see, Microsoft led in terms of gains, 1.6, actually not really led, but it closed positive, 1.66%. Nvidia was at the positive 3.19%. Google, which is also known as Alphabet Inc., at 1.13% in terms of gains, and Meta as 2.05 gains. As you can see, most of the companies now are trying to gain the comeback. You can see they were mostly positive, apart from Amazon and Apple, and we are going to discuss the reason why, because we were able to witness the earnings report for these particular companies these last week, right? So when you look at or when we focus on the tech sector drives in terms of earnings report. So Microsoft, Meta outperformed rest of Magnificent Seven for the week. So the Magnificent Seven, we talk about the seven tech companies: Microsoft, Meta, Nvidia, Google, Tesla, and Amazon and Apple. So as you can see, we have been having quite a strong rebound there because of the tariffs being posted. And also, again, these gains were as a result of open negotiation, now that China and US are open for negotiation. So this helps in terms of the earning boost. The strong earnings from Meta and Microsoft led to significant stock surges, which contributed to the overall market optimism. Now investors are gaining the optimism or the confidence now to start investing in these US equity market. In terms of market leadership, technology and industrial sectors outperformed with respective gains of 3.92% and 4.33%. So quite a bit optimism there because now we see that comeback, which gives investors a lot of confidence, or what we call investors' confidence, trying now to come back, and we see some inflows now start coming into the U.S. Market. So in terms of trade tensions and economic outlook, we can discuss, or we definitely have the tariff impact, and I'm looking at these compared to the GDP data, the US GDP data for Q1 that we had, which was negative. And the US imposed tariffs have led to a negative 0.3% in Q1 GDP. And increased recession probabilities among major banks. So these data, or the Q1 GDP data, of course, the overall was negative 0.3% as reported. But if you look at other things that, or other sub-datas that come up with this, we have the consumer spending, which was positive, plus 1.21%, investment plus 3.6%. Now, this is because of the investors' confident. The government was negative 0.25. We have export at 0.19. But the major factor that dragged this is because of the imports. That is a negative 4.83%. And this has majorly been attributed to the tariff impact, the imposed US tariffs, which has really impacted the imports sector. And this is what made now the overall GDP to be at negative, and also to increase the probabilities of recession in when you look at major banks overview, right? So we are talking about more than 50% actually chances of a global recession starting this year. So, and the reasoning behind this is the economic pressures which have been stemming from Trump's tariff, which look more likely than not to push the global economy into a recession, right? So, as we stand now, we are looking at an average of 50% chances of the US market going into a recession. So in terms of global response, we have seen China and the US showing openness to trade negotiation, potentially helping to ease the tensions. And that's actually, since it was announced on Friday, it helped even boost some of the equities, the US equities, the Chinese equities, and also the equities in the Asian session in general. So this is something that will be really following keenly come this week because it was announced on Friday. So this week we want to see how the negotiations are going to pan out, and which is likely to inform trading decision or to impact the markets. Okay. So last Friday we had that is May 2nd, we had the US job report, which actually we see came out. We had an additional 440. We had an additional of about um 177,000 jobs which were added vis-a-vis the expectation, or the expected value of about 138K. And also we saw the figure being revised down by 43K to around around 185K. So initially it was at 223, revised now by 43, down by 43,000 to come back to 185,000. So that is the previous month. But now with that kind of job report, it really helps a lot in terms of now looking at the US economy, what is likely to happen, what we are really looking at, or what we are really considering when it comes to now the US markets. Okay, so the non-farm payroll, like I said, came out at 177, which was stronger than anticipated. The anticipated figure was 138K, so we had a 177K. the unemployment rate stood at 4.2%. All right, the unemployment rate stood at 4.2%, and we saw the non-farm. We saw the average hourly earnings decreasing from 0.3% to 0.2%. So these kind of results, what we can see is that um, it has really maybe helped a lot in terms of trying to look at the US job market. What maybe probably we might maybe anticipate, especially now that with this kind of job report, we see a stronger economy, which means that the market is, or the Fed, one of the decisions is that the Fed is likely to lower, it's not likely to lower the rates, all right, because of these kind of results. And the reason why now you see, before the job, we had 55%. We were talking about before the job report. We were talking about a 55% maybe chances of the Fed cutting rates. But now after the job reports, due to the numbers that were posted, a strong US economy, so the chances of lowering rates goes to 33%. Okay, it goes to 33%, and also, tariffs are inflationary. So again, it's this week being federal week, will be anticipating the Fed to give their interest rates decision. That is after their 2 days meeting that ends on Wednesday. Um, so it's quite a bit for investors, something that as traders, we are really following keen. And for me, it's not about the decision itself. It's not about the rate number, whether they are going to maintain within the range of 4.25 to 4.5%. What really matters for me is the conference itself, because this is where we are going to hear the Fed chair, Mr. Jerome Powell, basically answer questions from journalists, and this will help us. He is going to start by giving a press conference, and there later off we will hear him answer questions from journalists in the Q&A session, and this is going to shed light in terms of whether their stance is dovish or whether their stance is hawkish. Though I anticipate a bit of hawkish stance because of the tariffs. So it's quite interesting anyway to see how the Fed is going to respond in terms of the tariffs. So the expected Federal Reserve rate, we expect them to maintain the rate the same. That is within the range of 4.25 to 4.5% in the upcoming meeting. And they usually hold a 2 days meeting before now transitioning that with the rate decision announcement. So and this is quite interesting because we have a lot of political, maybe not really political, but due to the tariffs, it's quite interesting to hear how Powell is going to respond, especially in terms of the tariffs. So also in terms of central bank policies, we have the Bank of England in focus, and it is anticipated to reduce the rates by 25 basis points. That is from 4.5%, which is the current rate, to 4.25%. And this will be in response as well to the economic pressures, especially from the global tariffs. So so these particular week, in terms of corporate earnings spotlight, this week we are looking at Palantir Technologies Inc., which is anticipated to release their earnings report this week. Uber Technologies Inc., Walter Disney Company, Shopify, Advanced Micro Devices Inc. So that is what we will be looking at this week. All right. So, but last week, maybe just a brief overview. Last week, we were able to see some of major companies release their earnings report. So, for instance, we were able to see Apple. which released their reports on May 1st. That was on a Thursday. And it delivered results that exceeded analyst expectations. However, there were some concerns over declining sales in China and potential tariff impacts, which influenced investors' sentiment. Maybe just a quick overview. The Q1 2025 financial highlights for Apple. We saw a revenue of 95.36%, 95.36 billion, which they reported vis-a-vis the forecast of 94.54 billion, right? So they exceeded in terms of revenue expectations. So the net income came in at 24.8 billion, which is 4.8% up from the previous year. The earnings were actually 5% increase also year over year. So the EPS, which is key aspect when it comes to now what investors look at when they start analyzing this stock. The EPS, that is earning per share, stood at 1.65%, surpassing the consensus estimate of 1.61 dollars. So the EPS came in at $1.65, surpassing the consensus estimation of 1.61 dollars. So the gross margin stood at 47.1%, reflecting a strong operational efficiency, whereas the operating cash flow stood at about 24 billion, enabling significant shareholders return. But what was really interesting is Meta and also Microsoft. But before we look at the Meta and Microsoft, maybe a quick overview of Amazon's Q1 2025, because they also released their earnings report. So they delivered robust results that surpassed analyst expectations. But again, there were cautious guidance for Q2 and other concerns over tariff impact that we have seen tempering, or that have tempered with investors' enthusiasm. So in terms of revenue, we saw a revenue of $155.67 billion, which is a 9% increase year over year, exceeding analyst expectations of $155.15 billion, which was the expected revenue. So net income came at $17.1 billion. We saw 1.59 per diluted share, up from that is $1.59 per diluted share, up from 10.4 billion. That is, or maybe if I put it in simple terms, the net income stood at $17.1 billion, or what you can say $1.59 per diluted share, which was up from $10.4 billion dollars, or $0.98 per share in Q1 2024. So operating income came at 18.4 billion, a 20% increase from the previous year. And we saw Amazon Web Service revenue grow by 17% year over year to about $29.3 billion dollars. Okay, so but let's maybe have a keen outlook of Meta and Microsoft. So Meta reported their Q1 earnings on April 30th, 2025, and they showcased a robust financial performance that surpassed analyst expectation. So their revenue stood at 42.31 billion, vis-a-vis the revenue forecast of 41.34 billion. So, which is a 16% increase year over year, exceeding analyst expectations of 41.38 billion, as mentioned. The net income stood at $16.64 billion, up that 5% from the previous years. The earning per share, that is EPS, came out at 6.43, a stunning $6.43, surpassing the consensus estimate of $5.223. The operating margin, we had a 41%, an increase from the previous from 38% in Q1 2024. So things like the advertising revenue stood at 41.39 billion, a 16% year-over-year increase, driven by a 5% rise in ads impression and a 10% increase in average price per ad. So the strategic initiatives and outlook is the AI investment, where Meta increased its 2025 capital expenditure forecast to between 64 to 72 billion dollars, up from the previous range of 60 to 65 billion dollars. This is basically to support the AI infrastructure and development. So the Q2 2025 revenue guidance projected between 42.5 billion dollars and 45.5 billion dollars, aligning with basically what most of the analysts expected, or what most of the analysts are anticipating. So if you look at maybe probably the performance of Microsoft, they were able to report their Q1 2025 earnings on April 30th, 2025, again delivering strong results that surpassed expectations, which is driven by robust growth in its cloud and AI services. So the Microsoft, we saw Microsoft actually during the announcement say that their quarterly profits are up 18% as it weathers the tech sector turbulence with cloud growth. So in terms of numbers, the Q1 2025 financial highlights, we talk about revenue growth of 70.1 billion that was announced, vis-a-vis 68.44 billion, which was the expected revenue. And this is a 13% increase year over year, exceeding the anticipated value. So the net income stood at 25.8 billion, up 18% from the previous year. The EPS stood at $3.46, surpassing the consensus estimate of $3.22. And in terms of revenue, Microsoft Cloud revenue, we saw $42.4 billion, a 20% increase year over year. The Azure and other cloud services revenue grew by that 3%, which reflected a strong demand for AI and cloud solutions. So in terms of strategic initiative and AI investment, we saw the Microsoft CEO Nadella emphasizing the company's commitment to AI, stating, and I quote, cloud and AI are essential inputs for every business to expand output, reduce cost, and accelerate growth. So the company announced also plans to invest approximately 80 billion in AI infrastructure this year, including partnership with OpenAI and significant expansions in data center capability. So this is quite some interesting news, especially for investors to look out for, and now to be able to now do other analysis to determine whether maybe these Microsoft, Meta, Amazon, Apple, these tech giants, whether they are best for buy, maybe if it's a strong buy or just a moderate buy, or neutral, or maybe a sell. So it's quite interesting, and that's what we really do in our sessions, whereby we do the stocks sessions, whereby we analyze some of these stocks in depth. All right, so if it's quite interesting, especially if now maybe probably you want to invest in the stocks market. So maybe you can reach out, and we can be able to give you a detailed guidance on that. So key events this week, we are looking at May 5th, 2025, that will be on Monday, tomorrow. So the inflation CPI for Swaziland at 9:30 a.m. GMT +3, which is high impact. May 7th, 2025, that will be on Wednesday. The employment outlook for New Zealand at 1:45 a.m. GMT +3. We'll be also having the federal Fed rate, that is the Fed, which will be announcing their rate decision. That will be on 9 p.m. GMT +3, which again is a high impact, and the currency impacted, of course, it's the dollar. And thereafter, the FOMC press conference. This is my favorite, all right? This is my favorite. Like I mentioned, I'm not just looking at the number, but I'm looking at the reason behind the number. And this is what is able to, this is where we get maybe some prolonged sentiment, how the market, how the dollar is likely to react maybe in the next near future. So that will be happening at 9:30 p.m. and again, quite high impact. So on May 8th, 2025, that is on Thursday, we'll be having the Bank of England official bank rate at 2 p.m. GMT plus 3. The currency to be affected is, of course, the Great British Pound. We anticipate high impact. The unemployment claims for the USD will be coming out on 3:30 p.m. Same day. The currency impacted, of course, is the USD. So that is a high impact. And on Friday, we have the Canada's employment outlook at 3:30 p.m. And again, quite a high impact expected. So in terms of investments and consideration, so the key things we are looking at this week is market volatility. So we'll be monitoring the ongoing trade negotiation between US and China, and whether maybe other nations are going to follow suit. So it's something that is quite important to monitor, because again, it will definitely have an impact in the market depending on the outcome. So also the central bank decision, it's going to drive the market volatilities, especially the Fed on Wednesday and the BOE on Thursday. So also it's important now to diversify, or diversification is very important. So investors may consider diversifying portfolios to mitigate risk associated with sector downturns and geographical uncertainties. So also we have elections upcoming in Australia, Singapore, and Romania, which may have market implications depending on the outcome. So these are likely to impact the specific markets in these locations, and maybe probably the major indices in these particular geographical locations. Okay, so it's quite an interesting week. We want to see what transpires. And before we go maybe to the charts, the quote of this week that really touched, that really resonated, or that really I found it being meaningful, is one from Warren Buffett, because we saw they had a meeting for Berkshire Hathaway's on Saturday. And one thing he said, and in response to the tariffs, he said that the world is not going to adapt to you. You are going to have to adapt to the world. So you are the one going to have to adapt to the world. So even in the financial market, the financial markets will never adapt to you as a trader or as an investor. So you are the one who is supposed to adapt to the markets, okay? And that really resonated a lot with me, especially in these financial markets. So let's now go into the charts. We look at the DXY and the dollar index. We look at the DXY, that is the dollar index, and also gold analysis. So in the markets, last week we were able to look at this setup. If you watched the last week weekly market snippets, we were able to identify this gold setup, where we were targeting the market to take out last week's the liquidities for last week but one. And that was quite a good drop. As you can see, the market came to our area of interest, and we have seen a drop of about 859 pips up to our target. But as you can see, the market continued to push on the downside. Okay, so the market dropped actually about 1,435 pips. So this was quite good. It was quite a good week. So we can delete that. So, but before we look at gold, let's look at the dollar index, so that we can remain quite informed. So we begin by looking at the weekly time frame, and from the weekly time frame, last week but one, I really mentioned and emphasized on this, that as we saw these weekly weekly candle closing as a bullish pin bar. So we anticipated last week to be a bullish week, and as you can see, the market closed quite a bit bullish, which was also propelled by strong job reports on Friday, whereby we saw the US job report came in stronger than anticipated at 177K vis-a-vis the expected 138K. So with this now, as you can see, this was a very key level for the dollar. It has been quite a strong support level, and now the price is trying to break above. So, what is very important, or what is essential, is to monitor how the price now reacts to this zone. So, this is a zone that I can say it's a zone of neutrality because the price is back to this support level. So, if you look at it from the weekly time frame, you might realize that let's draw it like that. You will see that the price had a breakout. All right, we see this was quite breakout, and maybe probably let's look at the daily time frame. So the daily time frame shows well this we had a breakout here. So as you can see now, the market is trying to create some higher highs and higher lows. So what will be of importance this week? We want to monitor. So I'm looking at a stance. Whereby this price is able to close strongly above this point of the support level. Now, you know, when the support level breaks out, it becomes resistant. So I want to see now the market being able to break, and breaking above is the body of the candlestick, closing above this now resistant level, and that will mean that now we will be turning bearish. Okay, we'll be turning bearish as we look at, that means we'll be turning bullish as we see how the price, or as we anticipate the price to come back to these levels. And one of the key things that is going to drive maybe probably the prices this week, what is going to impact the dollar index this week, we have the FOMC on Wednesday, and also maybe the trade negotiations between the US and China. Whatever the outcome will be, definitely anticipate to see a replica of that in the dollar index. All right, so that will be something to monitor keenly. So if the price is able to break above this point, therefore we'll be looking at a retest, and then we see the price pushing up all the way to this level. So this will be my trading week range. All right, that will be my trading week range, maybe in terms of bullishness. But in case you are going to see bearish conditions come into play, then we anticipate to see the price drop. All right, break below this point and maybe probably a retest, and then now we see the price continue pushing on the downside. So that will be my bias, either bullish or bearish, because a lot of sentiments are going to affect this. The Fed on Wednesday, will they, even if we know that higher chances that they're gonna maintain the rate the same, but what is their stance? Is it hawkish or is it dovish? So a hawkish stance basically strengthens the dollar, and a dovish stance basically weakens the dollar. So that's what we are going to monitor, even from the 4-hour time frame. As you can see, it's quite significant to monitor what the price does. I was looking at the price being symmetrical. If you look at what the price did around this particular level, it was similar to what the price is doing around this particular level. And if you are able to draw this, all right, that line, so we see price is symmetrical. So higher chances, all my bias is maybe we're gonna see a strong dollar index again this week. And once these gaps are filled, because we have some gap which is not filled here. So once we have this gap filled, then we'll be monitoring, or we will be also anticipating the price maybe to push up. That is my bias. But again, you know, we work with the probabilities. But in case that does not happen, then we will be looking at a bearish bias, whereby we anticipate maybe to see the price drop below these major 4-hour, below this major daily low there. And once it breaks that major daily low, then we'll be maybe looking for a retest, and we see maybe more bearish prices. Okay, so that is my trading range for the DXY. Let's jump now into gold. So we go to the weekly time frame. So from the weekly time frame, we can see that the weekly candle was quite bearish, right? It was quite bearish there, as you can see. So, and the previous week, of course, the previous week but one, we were able to project or have a bias for this week that has ended, and our bias was sell. Again, also guided by the kind of weekly candle that closed last week but one, we see a strong bearish pin bar. So we anticipated this kind of move. So this week, what am I anticipating? So I'm still anticipating maybe to see lower prices, and the price coming maybe all the way to these weekly bullish engulfing, because this weekly bullish or the weekly bullish engulfing here is going to stand in as a demand level. So we might see the price drop to this level, and then maybe we see the price now some rejections, either a reversal or maybe probably a push or what we call um, um, a pullback. All right, that is the best word. So we might see a reversal. Reversal is whereby the market reverses completely and continues with the trend, and maybe probably we might see a pullback. So why I'm looking at it that way is because this is the weekly low. So the major low is here. So if the price is not able to break that, then we might see continuation of that push up, okay, from the weekly time frame. But in case we see the price break from this major weekly low here, so then we might see a retest and then now more bearish prices. Okay, so but that is from the weekly time frame. Let's narrow down to the daily time frame. So from the daily time frame, as you can see, we already have this particular point, we see the price sweeping out these almost equal lows. All right, we see the price sweeping almost those equal lows. So what maybe probably we anticipate from here is the price maybe probably might pull back to because the price touched actually the daily level that you are looking at. So this daily level here. So we might, as we see this retracement, then we might see the price pulling back again, maybe probably to these levels that we have here. All right, so these levels that we have here, the price can pull back to this level. All right, we have a level that we had marked last week, but that's really, should I say, it's really far, but it's not really far for gold, because with gold anything is possible. So I would want to monitor that level. But let's go to the 4-hour time frame now, whereby we can be able to get quite a clear preview. So from the 4-hour time frame now, my working range will be this. Okay, that is from the 4-hour time frame. My working range will be at this particular point. You see this last candle where we have the bearish engulfing. So this is where I'll be looking at the price coming to that level, and then I'll be looking for my sales opportunity. Okay, I'll be looking for a bearish trajectory. Right, I'll be looking for a bearish trajectory. So I can still have it slightly above that, okay, the risk level, because of this range. There are two zones that are close to each other. So, and then now I'll be forecasting where the price, I'll be targeting where the price was coming to, okay, where the price was coming to. This is the 4-hour time frame. That's the perspective that I am looking at. But in case the price breaks above this zone, then we still have this setup in place, so we can push it to this level. So we still have this bullish setup, which now in case the price is able to break above this zone, we'll be looking at a retest, and now we see a bullish trajectory all the way to this 4-hour supply level. Okay, so this is basically my projection for the week. All right, but now we always conduct or I always do the daily market live analysis from 10 a.m. to 11 a.m. So you can just follow up on that, so that we can be looking at the daily progression of these particular asset, that is gold. Okay, so but let's just a snip overview of the weekly time frame. Or before even you go to the weekly time frame, on the 4-hour time frame, you see what the price is trying to do here. The price tested this level, then we see the price pushing up again. So what will be of importance here? The key thing that we will be monitoring or looking at is this particular level. Right, you see that particular level. So in case the price is going to break above that level, this push up, in case the push up here is going to break above that level, then here we'll be having a neckline. Okay, we'll be having that neckline. Then we see the price retest this, and then now it is able to propel the prices to this particular level. So intraday, we might be finding some buying opportunities, maybe for the price to this level. Before now, we get to see the price push on the downside, because if we are looking at a bearish week, according to Power 3, we expect the price to open on Monday, maybe start pushing up. So between Monday, Tuesday, and Wednesday, that's when we anticipate the price to create a high of the day. All right, according to the ICT concept authored by Michael Anderson, and I put this credit to him because this is not my concept. We might see the price push up if we are looking at a bearish week. So we might see the price create a high of the day, maybe on Monday, Tuesday, or Wednesday, latest Wednesday, New York time. Okay, New York kill zone. So we might, or maybe London close kill zone. We might see the price do that, and then now we start experiencing, we start seeing now the drop. So because we usually have the open, then the manipulation, then now the distribution, the accumulation and distribution, right? Open, I mean, we have open, the price opens, Power 3, the price opens up. So then we see the accumulation, or what we call the consolidation, then the manipulation, that is the price moving to the opposite of the expected direction, and then now the price starts to distribute in the expected direction. So the reason why I'm saying we might see some buying maybe opportunities to these particular levels. We might see the market open up, push up slightly, maybe to these levels, and then now we start seeing the activation of this particular zone that we have here. All right, so that is my forecast or my buyers, but for more insights, make sure you join the live market analysis Monday to Thursday at 11 a.m. to at 10 a.m. to 11 a.m., whereby we are going to look at the progressions of this market on a daily basis, that is in terms of intradays. All right, so with that, then this brings us to the end of our market snippets today. And so from me, it's thank you. And let's meet in our weekly market analysis, whereby we share more insights and also analysis of various currency pairs and also equities and indices, right? So with that, I wish you a fruitful week, but be on the lookout in terms of a policy shift. Like I've said, what we are looking at in terms of market volatility, we are looking at the central banks in action, the Fed, and also the BOE, the Bank of England. And also we are looking at elections outcome in various economies that we have, various geographical areas that we are looking at the elections. That is Romania, Australia, right, and Singapore. So also we are looking at the policy developments in terms of negotiation. Already we have China opening doors for the US in terms of negotiation. So we want to really be on the lookout in terms of what is likely to happen. All right. So with that, I wish you a blessed week ahead and a very blue week ahead. So stay financially literate, and let's see you in the charts tomorrow.